trading can be a real challenge, and finding a simple strategy that works well across any market is like finding a diamond in a rough. I'm excited to share a strategy I've discovered that's not only easy to use but will make your trading experience way smoother. This strategy revolves around an amazing indicator known as the imbalance algo. It's awesome at spotting trends using the 50% Fibonacci level, making it super simple for you to identify potential trades. When a candle closes above the 23.6% level, consider it a signal for a possible long trade. If it dips below the 58.6% level, that's a cue to consider a short trade. Here's the best part. You can make it even easier by tweaking the indicator settings. So set the strategy to manual. Bump up the sensitivity to 7. Then turn off the show and fill options. And after that, disable the profit panel display. Alright, after that, declutter your chart so you can see the strategy in action more clearly. Keep only the long and short signal options active in the indicator section and disable the rest. This way, you can focus on the important stuff and grasp the strategy without any distractions. So now our strategy is super simple. It's just a basic buy-sell indicator with green triangles for buy signals and red triangles for sell signal. Trading with this indicator can be highly profitable as long as you're trading in a trending market. However, once the market starts moving sideways, you might notice an increase in inaccurate signals. But don't worry, I've got your back. We're gonna address this issue in a bit. But before we jump into the second indicator, let's take a quick break. If you haven't subscribed to the TradeGenius channel yet, you're missing out. We've shared over 300 profitable trading strategies, and subscribing means you'll never miss a single video or any future content. Plus, you can explore our entire library of videos to expand your trading knowledge even further. Now let's get back to the strategy. We're gonna add another powerful indicator with custom settings that'll help you filter out those counter trend signals and keep you out of choppy markets. That's right, this unique indicator will be your secret weapon against misleading signals, ensuring you stay on the top of the trading game. Plus, it'll alert you when the market's ranging, so you don't get caught in the dreaded sideways price action trap. It's called the 10 and 1 different moving averages indicator. Yeah, the name is a bit long, but trust me, this gem will work wonders for your trading strategy. Let me guide you through the setup process so you can harness its full potential. Once you've added the indicator, we'll focus on the input section to set up 4 moving averages. Here's how. First, let's crank the first one up to EMA 20. Next, switch the second one to EMA 50. Moving on, set the third one to EMA 200. And for the grand finale, we'll set the fourth one to EMA 100 and change its time frame one time frame greater than the chart time frame, which is here 5 minutes. So we set it to 15 minutes for the EMA. You can also customize their colors and thickness in the style tab, make them stand out. The way these moving averages stack up is super crucial to figuring out the trend direction. Here's how it works. When you look at your chart and see the 20 EMA line is higher than the 50 EMA line, and the 50 EMA is sitting above the 200 EMA, and the 200 EMA is higher than the 100 EMA of the higher time frame, you can recognize this price movement as an uptrend. Just remember, the price candles should also be above all these lines to confirm the upward momentum. And if the 100 EMA is above the 200 EMA, the 200 EMA sits higher than the 50 EMA, and the 50 EMA is above the 20 EMA, the market could be experiencing a downtrend. Just like in uptrend scenario, you'll want to ensure that the price candles are below all these lines for confirmation of the downward momentum. Check out this example where the higher time frames EMA 100 is completely horizontal. This is a telltale sign of a sideways market. As you can see, the other moving average lines and price candles keep crossing above and below it. That's why it's best to avoid entering trades when the higher time frames EMA 100 becomes horizontal. It signals choppy price action, making it difficult to predict the market's direction. Take a look at this chart with a clear uptrend. Notice how the candles are hovering above all the EMA lines in the correct order. However, it's crucial to stop entering trades if the candles crosses even one of the EMA lines downward. Wait until the candles climb back above all the moving averages in the right order before considering new trades in an uptrend. The same principle applies to downtrend. Just look for the reverse EMA line order and candles below the lines. By following this approach, you'll be able to avoid trading during uncertain market conditions and focus on opportunities with higher probability of success. With the EMA 20 above EMA 50, EMA 50 above the EMA 200, and EMA 200 above the higher time frames EMA 100, all you need to do is keep an eye out for a buy signal from the imbalance algo indicator. Make sure the signal candle's close price is above all the moving average lines before proceeding. Once these conditions are met, you're good to open a buy trade. For your stop loss, set it slightly below one of the moving average lines or just under the recent swing low in the market. When determining your target, a good rule of thumb is aim for a reward that's 1.5 times the size of your risk. And when you spot a clear downtrend, you'll want to confirm that the EMA 20 is below EMA 50, EMA 50 is below EMA 200, and the EMA 200 is below the higher time frames EMA 100. Also make sure that the candles are trading below all these moving average lines. Next, keep an eye on the imbalance algo indicator for a sell signal. Once you see one, ensure that the signal candle's close price is below all the moving average lines before proceeding. Once everything lines up, you can confidently enter a sell trade. And for your stop loss, place it slightly above one of the moving average lines or just above the recent swing high. To set your target, calculate that by multiplying the distance between the stop loss and the entry price by 1.5. giving you a favorable risk-to-reward ratio. And if you're interested in discovering how even a beginner trader can build wealth using simple strategies and a small amount of capital, be sure to check out the recommended video on your screen.